Good afternoon, good morning, depending upon where you are. Welcome to the June 2024 WASDE Review webinar. My name is Greg Horstmeyer. I'm Editor-in-Chief at DTN, and I'll be your moderator today. With me, as always on these webinars, is Todd Hultman. He's our lead market analyst at DTN. Todd will be sharing his insights into the latest USDA numbers from earlier today. During this event, all the participants are in a listen-only mode. You can ask questions at any time during the event, and to do that, you'll click on the Q&A panel, which should be at the bottom right of your screen. That'll open up a messaging panel where you can type questions into there, and then we'll address all those questions at the end of the webinar after Todd has finished up the full report. Also, this event is being recorded, and a rebroadcast link will be on the dtn.com website within 2 business days. So if you want to review it or share it with somebody else, it'll be there at dtn.com. With that, we're ready to begin the webinar, so I'll turn things over to Todd. Todd, I guess the surprise today was no surprises. USDA stood pat on most of the numbers.
Yeah, for the most part, that's really true, Greg. And we've had kind of an ongoing frustration that USDA is reluctant to come down on their South American estimates, and that's going to be true again today. So thank you, everybody. Thanks for joining us. We'll take a look here. I don't think it's probably going to take too long, as you're going to find out a lot of these estimates stayed the same as a month ago, but we'll go through the report and be glad to take any questions you have in that chat session, which I can address later. So anyway, starting out June WASDE, what were our expectations for this report? Well, typically the June report is fairly quiet. It's somewhat rare that USDA makes changes to their corn and soybean production estimates in this report from May. We have had a lot of weather challenges. Obviously, the past month, planting has not been as easy, especially in some of the wetter states. And we've had a lot of severe weather. So I guess I would put out a promotion that I think the June 28 report is going to be very important for where prices go from here. And that's going to be USDA's acreage report. And it will not be a report that maybe shows 100% finality, but it should give us a very strong indication of maybe just how many corn acres did get planted successfully this year. And so keep that on your calendar. June 28 we'll be back. So anyway, for today's WASDE, let's jump in and get started here. And as usual, we'll start with corn. I'm showing you the USDA balance sheet for the US corn supply and demand situation here. The farthest right column are today's new estimates for the month of June. And this is for the new crop year of 2024 to 25. So that's the corn that's currently being planted or has been planted for the most part already. So kicking off the new season again, we're picking up from the May estimates, which are shown in the middle column. And as you go down the line, you will find out that there were no changes made to USDA's supply and demand estimates for corn in the current season. We're still looking at a crop estimate of 14.86 billion bushels. USDA stayed with their record high 181 bushel per acre yield, even though we had the struggles with planting that we have the past month. They're going to stay with that at least this month, this time around. And all the demand estimates stayed the same. So we get down to that bottom square and we see the ending stocks estimate unchanged, 2.102 billion bushels. By my calculation, that's just over 14% stocks to use ratio, and that's typically a bearish indication of comfortable supplies for corn. You can also see the average farm price estimate at the bottom there did not change. USDA still expecting an average for the season of $4.40 as a cash corn price. So still a bit of a tough outlook, weighed down by heavy supplies. Not too different from expectations. Dow Jones survey had thought that maybe there was a chance USDA would come down on that yield estimate a little today, but we did not see that in this month's report. So let's move on to the world estimates for corn, and the 23-24 season is the season that South America is still growing crops in. So I just wanted to check in there. And there we see for Argentina and Brazil both no change in the corn production estimates. Argentina is still 53 million metric tons. Brazil is at 122. Those are both significantly higher than the local estimates for those crops. The Buenos Aires Grain Exchange for Argentina is estimating 46.5 million metric tons on corn. So there's quite a difference of opinion there between USDA and local authorities in Argentina. And for Brazil, CONAB is looking for 111.6. So also a wide disparity there between the local viewpoint and what USDA says for those two crops in the current season. The other thing I just wanted to point out, the third column is the import total that's estimated, and Canada stayed unchanged on that, 3.2 million metric tons. Sometimes we get some questions about that from our listeners. And China's import total of corn also was unchanged at 23 million metric tons. Now I want to shift you to the new crop season world estimates for corn. And in this season, this takes into account the US season that is currently getting underway right now. And of course, for South America, their season doesn't really start until planting begins this coming fall. So this is looking quite a ways out there, but we did see some changes here. If you look at the upper right corner, the world ending stocks estimate for corn was reduced modestly from 312.27 million metric tons down to 310.77 million metric tons. The changes behind that small reduction for the world ending stocks estimates came from the demand total, which you see on the top line, third column from the right. You see we have a bit of an increase there of roughly, sorry to do this on the fly, about 1.4 million metric tons is their estimate of world demand increased. Along with that, we had a slight change. No, I'm sorry, no changes at all in Argentina and Brazil. Keep in mind, those crops aren't planted yet, as I mentioned. And then if you look at the lowest line for Ukraine, there was a slight increase in the export estimate of corn for Ukraine in this new season. But that's a bit of a surprise because right now, and a production increase also. Sorry, I didn't highlight that. That's a bit of a surprise because, as you may know, the Black Sea region is going through a stretch of hot and dry weather that may have impacted crops a bit, and that may be with us for a while. Even though there is a little bit of rain in the forecast this week, that Black Sea region has missed out on a lot of earlier rains this year. So it's a bit of a surprise to see USDA increase the corn export estimate, especially this early for Ukraine. And then lastly, when it came to China, and I'm sorry, but the line for China doesn't fit on this table. Both the production estimate and the demand use estimate stayed unchanged for the month. So no changes there. USDA still looking for a record corn crop out of China of 292 million metric tons this season. And early on, they seem to be having favorable weather. All right, let's move. Let's get a bit of a historical perspective of where those world corn supplies are. And I always like to look at the metric of excluding China for a couple of reasons. One, we can't really trust the numbers that come out of China. But number two, they're not a major exporter of corn anyway. They're really struggling to be self-sufficient still. So if we take China's estimated corn stocks off the books and look at everybody else, we see USDA estimating a world surplus of corn, 3.86 billion bushels at the end of this new 24 to 25 season. That's basically right in line with where we've been the past 4 years. So it's interesting to me that here in the US, we've transitioned from a tight corn supply last year to a more generous corn supply this season, but worldwide, the surplus of corn hasn't really changed much. And for the fourth year, this will be. So basically a stable outlook as far as world supplies go. How about our U.S. corn export total this season? Well, it's actually doing fairly well. And by the way, the red line on this chart are actual shipments of corn as of June 6th. They're up to 1.55 billion bushels of corn. That's up 24% from a year ago. The year ago pace is represented by the green shading. The black line you see is the 4-year average. So we're not quite up to the 4-year average, but we are doing much better than a year ago. And I still think, even though they did not change the export estimate today on corn, there is a chance that we may see higher corn exports than USDA estimates by the time we get to the end of August. And the reason I say that is because if you look at total sales, we're already within 57 million bushels of the export estimate. So as long as we can get the sales in there, there's going to be plenty of motivation to ship the corn. And we'll have to see, but we have almost 3 months left. So it seems quite possible to me that we could see more corn exports than USDA is currently looking for. On as far as the demand situation for corn, the ethanol spread continues to be very favorable. The blue line on this chart comes from a weekly report from USDA that shows corn's processing value, and that is what happens if you take a bushel of corn to the ethanol plant. How much value do you get out of the ethanol and the distiller grain and the corn oil that comes from that bushel of corn? And the current answer is $6.40 a bushel. So that's a nice margin. That's well above the current national average cash corn price. We have the DTN corn index there on the lower end at 431. So nice $2.09 spread there is plenty of room for ethanol plants to have good incentive. And overall in this corn season, the current corn season we're in, ethanol production's up 4% from a year ago. So we continue to have good incentive and good demand for corn domestically. The basis I always like to show because it's such a good indication of demand, especially when we compare to previous years. The current basis that we're looking at on this chart is compared to the July month, and it's the red line on this chart, and hopefully you can tell. The nice thing about it is that basis has continued to strengthen fairly consistently since harvest. We really haven't seen a leveling off or a falling off yet. Here we are in early June. So even though we're not at the highest or the strongest basis we've ever seen, we're roughly at the 4th strongest we've seen in 10 years. And our DTN National Corn Index is currently 17 cents below the July contract. So for the year, and in spite of the fact that we have over 2 billion bushels of ending stocks estimated, this to me seems like a very good sign of corn demand that we see the basis levels holding up as well as they are. So to me, this seems like good news for the corn price. The new crop corn price itself, this is the December contract I have pictured. Obviously, it's been sliding lower basically since early 2022. And ever since harvest, we've been at a very low range, of course, below $5 most of that time. But what is the speculative opinion at this moment? Well, they're still short. They're not as short right now as they were in February when corn hit a low of 446. They've covered a lot of positions from then, but they are still favoring the short side of the market by roughly 120,000 contracts or so there. And the thing that surprises me about that is because I think we do have some serious questions coming up to the acreage report here. There is a risk that we're going to have less than 90 million acres of corn planted. So maybe I'm wrong on that, but specs don't seem to have any concern for that at the moment. So we'll see on June 28 how that report turns out. But right now, specs could be a little vulnerable, holding as many short positions as they have in corn at the moment. Let's take a look at soybeans now. Again, we're going to start with the U.S. balance sheet here. The right column is today's estimates for the month of June. And we're going to see that the production estimate, like in corn, was kept unchanged. USDA is still sticking with 4.45 billion bushel crop for the new season, but our beginning stocks increased by 10 million bushels. So we have to go to the left column, which is the total for the current season. That's the old crop soybean supply and demand estimates. And what caused that 10 million bushel change? Well, USDA reduced the crush estimate by 10 million bushels. It was 2.3 billion before. Now you can see the red arrow shows the crush estimate at 2.29 billion bushels. I'll show you another chart showing the crush pace here in a minute, but I guess it surprises me a bit that USDA did this today. I think there was probably better reason just to leave that crush estimate alone. But time will tell which of us is correct on that. Anyway, the old crop ending stocks, instead of 340 million bushels, now went up to 350. And of course, that 10 million bushel increase translated to the new crop season on the far right column. So instead of a 445 million bushel ending stocks estimate, we now have 455 million bushels of ending soybean stocks estimated. That works out to a 10%, 10.4% ending stocks to use ratio. Historically, that's been fairly neutral to have that level of supplies for soybeans. Usually will keep you close to your cost of production estimates for soybeans. So for most of them, we're still trading a little low in my mind, but of course there's other bearish reasons out there coloring the market as we look farther down the road. So we'll get into that more in just a bit here. Bottom line though, 10 million bushel increase in the ending stocks estimate. And by the way, that's exactly what Dow Jones survey was expecting. So no big shock to the market here. The old crop situation for the world balance sheet, I just wanted to show you as far as Argentina's estimate, it did not change. USDA is still estimating a 50 million metric ton crop. For Brazil, however, USDA came down from 154 to 153. And boy, I'll tell you, when it comes to South American crop estimates, USDA has really been stingy this year. And this is probably one that's hard for me to explain or understand. And just to put it in perspective, in the growing season early for Brazil, we had a lot of hot, dry weather, a lot of concerns. And basically, CONAB's estimates, the Brazil Crop Agency, CONAB, their estimates went lower, but USDA's estimates stayed relatively high. So here today, USDA is at 153. We just had severe flooding in southern Brazil, basically in Rio Grande do Sul, over the past month or month and a half. Not only did it wipe out probably 2.5, maybe 3 million metric tons of soybeans from production, it also devastated transportation, infrastructure, it shut down crush plants, and it delayed shipments out of the local ports there in southern Brazil. So it's been a real mess. And to come in here and see USDA just reduce this estimate by 1 million metric tons has me really scratching my head, as maybe it does for many of you. But that is the estimate. I should say CONAB's current estimate for Brazil is 147.7 million metric tons, and they will have their new estimate on this crop out tomorrow morning. So stay tuned to DTN. I'm sure we'll have that in our daily market comments. Lastly, the crop estimate for Paraguay stayed unchanged, 10.5 million metric tons. So that wrapped up the old crop changes. Now let's take a look at the new crop changes. And if you look in the upper right corner, you see USDA slightly reduced its estimate of world soybean stocks from 128.5 down to 127.9. That's not much of a change at all. And overall, all three of the South American estimates stayed the same. And again, those crops won't be planted till this fall. So this balance sheet is looking far, far ahead. But here's where soybeans have really a kind of a bearish anchor when it comes to the price outlook, because that ending stocks estimate of 127.9 is a new record high surplus for world soybeans by far. And it's largely based on Brazil having this record high 169 million metric ton soybean crop. And that's the one that's not planted yet, but it's largely anticipating another big year of expansion in soybean production from Brazil. And so that's one thing I think that has traders a little bit worried when they look down the road, if that comes true or anything close to it. How are exports doing? Not so great, to be honest, but we've known that for a long time. We've actually seen exports tailing off since last Thanksgiving. They've really lagged their normal pace, as you can see by the red line on this chart. As of June 6th, soybean exports are 1.446 billion bushels. That's down 17% from a year ago, which is the green shaded area, and it's down about the same from the black line, which is the 4-year average. So we've really seen Brazil eat into our export potential this year. And of course, we came up short on our crop last year, so that also explains part of why we're having such a tough time with the soybean exports so far. Now, the good news is USDA is already expecting a lower export estimate. And if you look at total soybean sales, we're within about 46 million bushels of that 1.7 billion bushel export estimate. So again, with almost 3 months to go, there is a good chance we could at least get enough sales. And if you get enough sales, you have a chance at picking your shipments up. But that's where we stand so far. It's just slightly below the estimated pace. Here's the soybean crush situation I was talking about, and again, why I'm a little surprised. Now, I do understand that for the month of April, we had a sharp drop off in the crush total here in the US. And I think some of that was maintenance, and some of it may have been um, other reasons, but for whatever reason, we did have a sharp 1-month drop off in the month of April, and I guess that probably was part of the reason USDA reduced its crush estimate total by 10 million bushels. Overall, however, throughout the season, we're still up 3.8% from a year ago. And if you look at the margins here, it still seems very attractive as far from a processor's point of view. And I say that because the blue line is soybeans processing value, which tells us that if you take a bushel of soybeans to the crush plant, they turn it into meal and oil and hulls of soybeans, and they get $14.09 of value out of that crushing process. And of course, the cash average for soybeans across the country now is $11.20. So we're just below $3 a bushel of margin on that crush operation. Still an enticing difference there that ought to give crushers plenty of encouragement to keep buying soybeans and keep crushing soybeans. So even though soybean oil prices themselves have been somewhat in the tank lately, they're at their lowest level in 3 years, we still have a very attractive crush margin here to help our domestic demand. And that's, I still think, a good news situation for U.S. soybean demand. The soybean basis, compared to the past 10 years, is not doing as well as corn, to be honest, and it's reflecting the higher supply and surplus totals that we're seeing being estimated. DTN soybean index is 58 cents below the July contract at the moment, which puts us about where the red circle is on the red line for this year. And that is the sixth weakest basis in the past 10 years. So not doing quite as well as corn, as I say, and reflecting that basically U.S. soybean supplies seem comfortable at this time. And my best guess is that that drop off in the export total this year has made it easy for crushers to keep buying soybeans kind of at the cheaper end, and evidently they haven't really abused it. They've paced themselves and haven't done anything to put soybeans in a tight situation. So there we go. As far as the new crop soybean price, much like corn, we've seen a steady move downwards since early 2022. We're down near 3-year lows, roughly again, in the soybean price. 1151 was last night's close on this. But what about the opinion of speculators? Well, it's kind of interesting here in soybeans. You can see we had a strong increase early this year in the number of specs going short soybeans, and that was at a time when things were looking very good in South America, and it looked like Brazil was going to have a huge crop, and they did have a large crop, but not as big as expected as things went. But basically, the specs really jumped into the market with both hands until late February. And then that's when the low of $11.23 was made in the November soybean contract. And we've been up higher since then. And part of it's been the planting challenges, and part of it's been the concern about situation with flooding in southern Brazil. So we've seen quite a bit of specs liquidate those very large, heavy short positions since then. And now they're holding a modestly short position. So they still have a bit of a bearish opinion with soybeans in this situation, but not nearly anything as heavy as what we saw back in February. This chart I showed last time that we were together, and I just show it again this year, again this time as an update. And this is basically showing the difference in FOB prices between Paranagua, Brazil, and our prices at the U.S. Gulf. So Brazil's the brown line, U.S. is the green line. Back in early February, there was a wide disparity. Brazil's prices were much cheaper as they were coming into their own on a very large crop. They were pulling our prices lower, but a lot's changed since late February, early March. And you can see there's been a dramatic rally in the price of soybeans in Paranagua, Brazil. We're very close to even as far as the FOB prices for the month of July. And again, it's a bit unusual to see prices this competitive and this close here in early June. This often happens more likely as we get closer to our harvest time in the fall. But here we have it happening in June already. So the obvious implication here is possibly that Brazil's soybean supplies have been drawn down much quicker than usual, and that points to very strong demand from China. And if that's all true, we've also seen a little trickle of soybean business to China recently. We got another sale, a small sale to China this morning, and I think it's just going to be interesting to see if China doesn't show up a little bit early this year, earlier than usual. Like typically we'd see them starting to come in around October or November. It'll be interesting to see if we see them start having an interest in buying U.S. soybeans earlier this year. And that's maybe the one bullish hope or possibility that I see for soybean prices at the moment. All right, let's take a look at wheat. Just two changes to note here on wheat. We're going to look at the new crop estimate, the far right column. And if you look at wheat production, USDA increased it by 17 million bushels. to 1.875 billion bushels. There's a crop production report we'll take a look at in a minute, which explains that. It's basically a small increase in winter wheat production. For exports, and keep in mind again, this is in the new crop season, which wheat is now in. We just started on June 1st, the new season. And of course, we're going to be harvesting winter wheat here around the world pretty soon in the Northern Hemisphere. But USDA increased the export estimate 25 million bushels to 800 million bushels. And I have to think maybe that's related to the weather challenges that we're seeing in the Black Sea period. So, or Black Sea area. They're having hot and dry conditions right now. And even though we may not benefit directly from Russia having a smaller crop this year, or the possibility of Ukraine having a smaller crop this year, there could be some benefits that come to the U.S. So we'll have to keep our fingers crossed on all that. Well, anyway, put those two changes together, we see a new ending stocks estimate, 758 million bushels for the new season. That is down just 8 million bushels from last month's estimate. And if you work it out, it's just over a 39% ending stocks to use ratio. So it's still a plentiful situation for domestic wheat supplies. Not a big change there, and not much different than what Dow Jones expected in their pre-report survey. The world estimates for the new crop season, I have a few things to show you here. Let's start in the upper right corner and just go right to USDA's estimate of world ending wheat stocks. We see a very minor decrease from 253.6 down to 252.3 million metric tons of world ending wheat stocks. But there are a lot of things happening, a lot of moving parts to make that happen. First of all, we'll stay on the top line. If you notice the production box, the production fell roughly 7.4 million metric tons in this estimate, and I'll get to the details of that. And at the same time, if you look at the domestic total use, that fell by 4.3 million metric tons in this estimate. So first of all, if we saw right off the bat that world wheat production was reduced by over 7 million metric tons, we'd expect a bigger drop in the ending stocks estimate than what's showing here. But along with that drop in production, USDA also reduced some of the world demand, and there was also about almost a 2 million metric ton revision from a previous season. So anyway, I still think the highlights here are the changes in the production estimates. So let's take a look at that. And we'll start on the left with Argentina. We see a slight increase in that wheat estimate from 17 to 17.5 million metric tons. They've had kind of a curious start. They were dry for a long time, and then they got some showers, which may be helping out a bit, but they've also had some very cool temperatures for early in the season. If we look at Europe, we see Europe's production estimate, and by the way, the production column is the second column from the left. Europe's production on wheat was reduced from 132 to 130.5 million metric tons. We've been talking for several weeks about constantly wet weather, especially in Western Europe. The UK and France just seems to be bogged down with lots of rain this year, and it's hurt their wheat crops. And so they are expecting a lighter total out of Europe. Russia, here's the big news, 5 million metric ton reduction. Instead of 88 million metric tons, USDA comes down to 83, which I think is a fairly reasonable estimate in this situation. We've seen some private estimates. Sovecon is at 80.7, so there are some slightly lower, but 83 certainly puts us in the ballpark of coming down. And this is, to me, is a strong acknowledgement of not only the freeze damage that Russia had in April and early May, but also the hot and dry situations that they've had, especially in southwestern Russia and in eastern Ukraine. Sorry. So speaking of Ukraine, you can see the production estimate was also reduced from 21 to 19 and a half for Ukraine. So total them all up, and of course, not all the countries that changed are seen in the totals on this page, but those are the main producers and main exporters. And if we total all USDA's production changes up for the month, they are down 7.4 million metric tons. So that certainly has offered some legitimate help to the wheat price, even though wheat has had, as you know, probably, they've had a very strong rally and then they've fallen off sharply lately, and they are trading lower again today. So wheat continues to have a tough time in the bigger picture. How do world wheat supplies look historically? Well, the the estimate of ending wheat stocks excluding China came down from 121 to just below 120. And so that's 4.44 billion bushels world surplus estimated. And again, that's excluding China. We're still at the lowest in 17 years, but we are above 4 billion bushels. So if we could break that 4 billion bushel mark, I think maybe the market would take the world supply situation a little more seriously. But having Russia's estimate come down certainly offers some legitimate help. Okay, I mentioned that NASS had a crop production report today, and they updated their winter wheat estimates. And here are the updates for the day. Winter wheat total. The new one is 1.295 billion bushels. That is up 17. No, excuse me. Sorry. Yeah, 17 million bushels from last month's estimate, and most of that increase came in HRW wheat. So the ending stocks estimate in HRW wheat was increased 21 million bushels. Now it's at 726. There were slight reductions in the SRW and white wheat production estimates down to 342 and 226. So overall, HRW took the bulk of the estimate. And of course, that's a harvest that's just getting off the ground now and just starting to move into Kansas. We're starting to get those Kansas harvest reports. Overall, here's our map of USDA winter wheat estimates this year. And I just wanted to highlight some of the top producing states. Of course, Kansas has the bulk of production, estimated 282 million bushel crop this year. Says USDA, that's up considerably from last year's 201 million bushel crop. The state of Washington's doing modestly better at 115, up from 94 and a half last year. Montana's coming in above 94 million bushels. That's better than last year's, roughly 86 million bushels. Texas is a little lower this year, and Oklahoma is doing better this year, coming in above 98 million bushels, up from 68 and change a year ago. So overall, as most of you know, soil moisture has been much, much better this year than what we saw last year. And of course, that shows up big time in Kansas, even though roughly 32 or 33% of that crop was said to be rated poor, very poor. They still have a lot of good crop news in Kansas this year. The basis for HRW wheat continues to be weak. It's the third weakest we've seen in the past 10 years. And it's 50 cents under the July contract is where we find the national cash price at the moment. So we just continue to see a situation where wheat supplies are available. The demand has really come up short on the export side of the market, and that shows up in the weak basis. Kansas City wheat, overall, you've seen the same slide from early 2022 that we see for corn and soybeans. Most recently, we've seen a pretty nice rally up until just a couple weeks ago in all three wheats, and the Kansas City wheat contract got up to, looks like almost $7.50 here. The specs, as you can tell, were largely heavily short until I believe it was about March. of this year. And then that's when we started getting reports that India had short wheat supplies, and they still may be an exporter later this year. We still don't know yet how that'll turn out. Europe had a freeze event, and of course, the excess rains in Western Europe. And then we had another freeze event in central Russia, and we're currently in a hot and dry situation in Western Ukraine and Russia. So a lot of those heavy short positions that we saw back in March have been liquidated, but overall, uh, Kansas City and Chicago wheat are still both modestly bearish as far as the spec opinions on the market. In conclusion, I have to call this report basically neutral for all three. Corn, there were no changes made to the US estimates and just a slight reduction in the world ending stocks estimate. Soybean ending stocks did go up 10 million bushels in the US, but it was very well expected. Slight reduction in Brazil's production estimate continues to baffle me why that can't come down lower, but time will tell who's right on that number. The US ending wheat stocks came down slightly to 758, but we're not talking about big changes here. Maybe the most hopeful thing for the wheat price was we did see a 7.4 million metric ton reduction in world wheat production, but as you saw, the ending stocks estimate didn't change much. So here you have three commodities, which I would say had basically a neutral report today. And as we speak, December corn's up 3 3/4 at 469. November soybeans are down 4.5 at 1147. So they're taking the market fairly mixed. It's the wheat prices that are 8 to 17 cents lower. And of course, they were lower before the report even came out. So plenty of selling interest still in wheat. Again, our next report will be on June 28th. It's going to be the acreage report and the grain stocks report. Two very important reports, and I think especially for corn this year, is going to have a lot to say about where prices go from here. So, Greg, with all of that, I'm open for questions.
Yep, thank you, Todd. And I want to remind everybody you can type questions into that Q&A box, and we'll get them to Todd. Todd, one of the things that you mentioned that a question about was on the corn side. We'll start with corn. That the U.S. is in a bit of a surplus situation, but our global stocks continue to be on par with the last couple of years. So, but yet that continues to put pressure on U.S. corn prices. And one of the other things you said is that, and I suspect as part of this, is a lot of that down pressure on our side is just the loss of exports, the less exports to China on corn probably, or to other parts, but especially to China. And that's primarily due to Brazil's competition with us there, right? On the corn side.
Yeah, and not only Brazil competing with us, but remember we have Argentina returning in the market this year. And now last year, Argentina had a really tough drought, and they had about half the production they're expecting this year. This year, they did encounter pest problems. They're currently about 35% harvested at the moment, so it's a slow, long process for Argentina to harvest their corn, but they keep encountering these pest problems, and that's knocked some off of the total. But again, the main reason we're exporting more corn from the US this year is because we had a much bigger crop last fall. The fall before that, we came up short. And so it's tough to export when you have higher prices because of higher prices at home and tighter supplies. This past year, we had that record fall harvest, USDA tells us, and so that helped us to export more corn this year. But that competition from Brazil and Argentina never goes away, and that will be a concern again next year, I can guarantee.
A question on wheat. What's your opinions on where Minneapolis wheat basis levels are going to go?
Yeah, unfortunately, we've seen Minneapolis wheat prices just break support this week. They broke some important support levels. And now that we've seen pretty well good planting pace across the Western Canadian Prairie, and our U.S. wheat is almost all planted, I think the market's starting to look past. And of course, they're starting out that since planting survived a lot of the rains that we got in May and early June, now those rains are giving us the thought that, wow, there's good soil moisture and good conditions for this spring wheat ahead. Now, in the US, the spring wheat is still a bit dry in western Montana to the Pacific Northwest. But overall, the Western Canadian Prairie is dealing with much better soil moisture this year, and the rest of the U.S. is too. Maybe too much in Minnesota, parts in North Dakota, maybe too much. But overall, cash spring wheat prices, I hate to say, but I think they're going to continue to be under pressure this summer unless we see some type of weather disruption. But right now, the outlook looks pretty favorable for a good spring wheat crop.
The question on beans, you talked about for so long, we've been talking about in general the expectation of higher oil demand with the whole sustainable diesel and those kinds of issues coming along.
Yeah.
But right now, as you've said, meal is really the thing that's driving the market. Oil prices are down, but thanks to meal, prices have stabilized and come up a little bit. Any clouds on the horizons on the meal demand side? If meal is going to be what's going to carry the freight right now, any worries about that domestically?
Yeah, to be honest, it's bothered me that soybean oil prices are not doing better as we progress more into the year, and not doing a better job of carrying their own weight. And I understand that. I think the problem is that the growth in the use of cooking oil and tallow has been so dramatically fast. It's come on quicker than I expected, number one. Let's put that out there. And um, and to be honest, the SAF requirements disappointed me when it comes to corn and soybeans being part of the SAF market. Now I know soybean oil is automatically given entrance or qualifies for the minimum tax credit in the SAF market, but let's face it, there are other oils out there that have much better carbon scores that if I'm a SAF producer, I'm going to be choosing cooking oil and corn oil and tallow before I probably start buying soybean oil or canola. And that's problematic. On the other hand, I want to point out that um, we just got a report from USDA's Foreign Ag Service today, and I'm going to be taking a closer look at when I get some, more than the 10 minutes I had before this report to look at it. But they're still showing a very strong outlook for renewable diesel production, with soybean oil playing a part in that. And worldwide, I also think it's important to realize that basically right now we're seeing more bullish influence in the other vegetable oils around the world, palm oil and rapeseed specifically, than we are in soybean oil. But also part of that is because we're not the only country producing renewable diesel right now. It's going to be produced in Brazil and Malaysia and other countries producing renewable diesel. So those also have an indirect supportive impact for all the oil prices, including soybean oil. So to be honest, I think we still have a lot to sort out about how this is headed, but it always comes down for me to keeping my eye on that incentive chart I showed you earlier for the crushers. And let's see if I can get back to that. My fingers are going to be quick enough. There. It always comes back to this chart for me, because to me, this is where the rubber meets the road. When a crusher looks at the prices of oil and meal and soybeans, are they going to keep their plant open or not? And right now they're keeping the plant open because it's a cash generator. So it's a very complicated world scenario we have in front of us. But this is the one thing I think this is the chart that keeps me grounded as to is there real value here for that bean oil product right now or not? And right now, even though bean oil is not rallying higher, I think this is a good reason to at least expect it to have good support this year.
Staying with beans, do you think the question comes in, do you think USDA will ever come in line with South America with their private reports? The difference between the two expectations, do you see that equalizing out, or are we always going to be off there?
Yeah, Greg, I have to wonder. Part of me thinks we're never going to see those two come together between USDA and CONAB. And as I've thought about this a lot, I think there's a possibility here that we have two different perspectives. And if you notice, over the years, we've seen several times where USDA has revised the South American estimates. And what they've ended up doing is they end up reducing Argentina's production and increasing Brazil's production. And in my mind, I think it's because of the export taxes in Argentina has led to some sneaking product, corn and beans, over the border to be processed in Brazil to avoid the export tax. And it's making me wonder if USDA has started to factor in instead of going back and revising the past few years, because what ends up happening is it's the export data that proves out. And so Brazil ends up with more exports than their production seemed to justify, and Argentina ends up with less exports of soybeans than their production seemed to justify. And so I'm wondering if USDA is anticipating and making allowance for this now, and perhaps that's why we're seeing the higher estimate from USDA. But I can't say that I've seen a significantly lower estimate for Argentina this year. So I still have questions about that.
Yeah, maybe that's not quite panning out right now. Last question is on, do you have any feel for what the Russian canola crop is looking like? And because of the drought that's been affecting the wheat crop there, is that going to cut into the Russian canola crop?
I'm sorry, I don't, but I have good news, and that is DTN has hired a Canadian grain analyst who will be much more studied up on the canola crops around the world. So I'm not gonna, I'm not gonna pretend to know something I don't. But if the canola is in the western part of Russia, and if it's anywhere near that wheat crop, then yeah, that would be an area of trouble.
Yeah, could be suffering as well. Yep, yeah, and in fact, we'll have a new Canadian grain analyst on here in a couple of weeks. So looking forward to that. Great. If anybody, those are the last of the questions that have come in. I really want to thank everyone for participating. Thank you, Todd, for
Thank you.
walking through all this with us. Even though it was a little bit of a steady Eddie report, still a lot to talk about and a lot to think about as we go on. I want to remind everybody that, as Todd said, that June 28th report is coming quickly, and we'll have another webinar around that after that report comes up at 11 o'clock on the 28th. I'll remind everybody that today's event is recorded, and if you want to review it or pass it on to someone else in your operation who didn't get a chance to be here today, that rebroadcast link will be up on dtn.com and should be up there by Friday. We usually try to get that up there by 2 business days. Speaking of Friday, I'd like to note that this Friday we've got a separate webinar focused on the cattle markets. It's part of our DTN Ag Summit series webinars. And we'll be discussing livestock revenue protection plans. So some of the not new, but new wrinkles to livestock cost protection from crop insurance providers. We'll also get a livestock market outlook from our DTN livestock analyst, Shaylee Stewart. That event starts at 8:30 in the morning, so a different start time than this one, 8:30 Central Time. We are hoping to wrap that up pretty quickly before noon. This is part of the DTN Ag Summit series where we try to do little mini webinars on specific topics that then lead up to our big DTN Ag Summit in December. To register for that webinar, and it's free just like this one, you can go to dtn.com and go to the events tab, just as you do for signing up for these WASDE webinars. And you should see a button there to both look at the speakers who'll be there and also register for that event. And again, it starts at 8:30 on Friday. Hope that you can be there, and look forward to you also being with us on the 28th of June. I want to thank you again and thank Todd for working on this for us. That concludes our event for today, and I hope you guys and gals have a great rest of your week.
Thanks all.